Welcome to today's YouTube video. In today's YouTube video, we will be doing a trade recap of this banger that you can see on the screen right here. Today, we caught this short on the S&P 500, and I'm going to break down exactly why I took this. I'm going to explain all of my analysis, and you guys are going to see how to take trades just like this. By the way, this trade was a 4.54 risk to reward ratio, so very, very good. And honestly, it wasn't that difficult. So let's get right into it. So during this trade recap, I want to explain something very, very important to you. And it has to do with the NASDAQ and the S&P 500 working together, right? So yes, these are two separate indices. They move their own way. Yes, they are very correlated. But what you need to understand about these indices is you can use one indice to represent the other. Now, what does this mean? Well, sometimes analysis on the NASDAQ allows me to take a trade on the S&P 500 and vice versa. And that is exactly what happened today. So let's get right into it and let's start off on the NASDAQ. Well, if we start off on the 5-minute time frame, what can we see happen straight away? So going into market open, which is right here at 2:30, we can see that we go higher and then we get this big sell-off. When we got this big sell-off, here's exactly what I was thinking, right? I was thinking, well, are we going to reverse from here and are we going to push higher, or are we going to get a continuation lower? So what did I wait for? Well, we can see in this case, we have this 1-minute bearish fair value gap, and we can see price retested it and was giving us a rejection. That is a very bearish sign. What else did I notice? If I head over to the 1-minute time frame, and guys, this is one of the confluences that you need to be using, right? This is equilibrium, and let's get right into it. If we mark out equilibrium from the high of the move to the low, right? By the way, just for reference, swing high, swing low. Where does price retrace back into? Equilibrium of the range. We can see price comes in, taps into equilibrium. What else does it tap into? That 5-minute gap. Anything else? Taps into this 1-minute gap. Anything else? It taps into this 3-minute gap. So we tapped into all of those bearish fair value gaps. We also tapped into equilibrium and we were getting a rejection from it. So I was thinking to myself, sells are the play. Now, what did I notice? Well, on the 1-minute time frame, what did we have? Well, we had this bullish 1-minute fair value gap. And I didn't want to take the sell until we had inversed that gap. I didn't want to take it, right? We can see that this gap right here was holding quite strong. Price was struggling to break through. So I said to myself, well, you know what? What is the S&P 500 telling me? So I head over to the S&P 500, and this is where I saw the light. So now looking at the market on the S&P 500, what can we see? We can see that we have that same bullish 1-minute fair value gap. Did we retrace into equilibrium? No. However, what did we do? We inversed this 1-minute bearish fair value gap. But guess what? The NASDAQ had already retraced into equilibrium for the S&P 500. If we check the 5-minute time frame as well, same thing. We were rejecting off of this 5-minute bearish gap, right? We can see we have this 5-minute bearish gap. We retested it and we've got this big wick rejection. That is beautiful for sales. 1-minute time frame. We did not pull back into any of these gaps, but guess what? The NASDAQ had already done it for us. So once we got this confirmed closure below this bullish fair value gap, this is where we took our sales. Now, once we took our sales in this position, where were we looking to target? So let's start off with our first target. Firstly, we have this clear target right here, right? What is this? Equal lows. What are equal lows? A super strong draw on liquidity. We might as well call it a magnet. Price is going to draw there. Price wants to gather that. Price wants to take that out. What else do we have? Well, you can see I've got this thing marked out right here. You're probably thinking, what is that weird red thing on your screen, Seb? That right here is used to demonstrate that we have low resistance liquidity on the left-hand side. Low resistance liquidity is when we have lots of lows consecutively after another. And we can see in this case, we have low, 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 all the way up, right? What does low resistance mean? It means it barely resists. Now, in this case, you can see we flood straight through it with these big bearish candles. And that is because low resistance liquidity is weak. It's not strong enough. And when we have this massive magnet pulling price down, it's only right. So yeah, We ended up catching this beautiful sell. Now you're probably thinking, what did you target down here? What's going on down here? Well, if I go into the hourly time frame, you can see that that low is this low right here. This right here is Asia lows, Asian session lows. What does this mean? This means it's a strong draw on liquidity, right? I have multiple classes and I teach this in my mentorship as well. Multiple different types of draws on liquidity, right? As you see, we had equal lows, strong draw on liquidity. We have session lows, like Asian lows in this case, very strong draw on liquidity. We have data lows, that is news candle lows. In this case, we didn't have that, but you get my point. Now, in this case, Asia lows were a strong draw on liquidity. And as you can see, market just sold off, dumped beautifully, targeting these Asian lows. If I use this indicator right here, you're going to see very, very clearly Asia lows. And also, hold on a second, is that an equal low? Yes, it is. That is an equal low right there. Again, a magnet. So we have magnet number one, we have magnet number two, and we have low resistance liquidity. We also have London lows right here, so even more reason to sell. That's another session low. And as you can see, everything got swept beautifully. Now, what is the moral of today? Like, what did we learn today? How is this going to help you moving forward? Now, this is about the importance of utilizing both the NASDAQ and the S&P 500 in your analysis. You can't just focus on one because sometimes the setup is better on the other. In this case, was the setup good on the NASDAQ? Yeah, it would have played out. As you can see, we got a massive sell-off. It would have played out. But if we go into the 1 minute time frame, what can we see? Let's just get rid of some of these things. Let's get rid of this equilibrium. What can we see? We can see that the NASDAQ was resisting way more than the S&P 500. We see, did we inverse it with this candle? No. With this candle? No. Not with this one. Not with this one. Not with this one. Finally, we inversed it. Then we just chopped straight back up. Then we just chopped around for a bit. Then we got the sell-off, right? Now, let's compare that to the S&P 500, right? We got the inverse, flood, right? You see, you need to be able to pick up when an indice is more prone to a movement than the other. Now, in this case, the S&P 500 was more prone to selling off than the NASDAQ, which is why we took the trade on the NASDAQ, sorry, on the S&P 500. Do you see how all the confluences come together though? Equilibrium as well. I want you to keep an eye on that. Extension, retracement, rejection. Come on. Does it get any easier than that? This confluence right here, one of my favorite confluences. I've been going on about it all of the time because you need to be using this. You simply need to be using this. This is one of the confluences that I teach you how to master in all of my mentorships. I teach it for free, in fact. I've got free YouTube videos on it. So go have a look, learn how to use these confluences. That is how I caught this beautiful trade today. Great risk reward, great sell-off, great movement. This is what I'm talking about. And as you can see, low resistance liquidity, session lows, equal lows. It was price was only going to go one way, and that was down. So that is a full trade recap for today. Hopefully you guys enjoyed. Hopefully you learned from it. You see how we can use both indices. And yeah, feel free to ask me any questions in the comment section below. Drop me a comment if you enjoyed the video, if you enjoyed the trade recap. I'm going to be posting many more trade recaps for you guys. And remember, like, subscribe, and I will catch you guys in the next video. Peace.